Welcome to Financial Beacon Consulting. In this presentation, we are learning how to create customer invoices in QuickBooks from the beginning to the end. A good invoice helps your business request payment professionally, track what customers owe, and keep income records clean. Before you start, make sure you are logged into the correct QuickBooks company file. Also confirm that your customer list, products, services, and tax settings are updated. When these details are correct, invoicing becomes faster, clearer, and easier to follow. Check this carefully before saving the invoice. An invoice is more than a document asking for money. It is part of your financial control system. It shows the customer name, what was sold, the invoice date, the due date, and the total amount payable. For a growing business, invoices help you monitor unpaid sales and follow up before cash flow becomes tight. They also support bookkeeping, tax reporting, and management decisions. That is why every business should create invoices on time and avoid relying only on verbal promises or informal messages. Check this carefully before saving the invoice. Step 1 is to open the invoice section in QuickBooks. From your dashboard, go to the Sales area and choose Create Invoice. Use the invoice feature instead of entering sales manually, because QuickBooks uses the invoice to update customer balances and income reports. At this stage, pause and confirm that you are working in the right company file. This is important for accountants and business owners who manage more than one business, branch, or client account. Check this carefully before saving the invoice. Good invoice details make payment follow-up easier. Step 2 is to choose the customer. Select an existing customer from the list, or add a new customer if they are not yet saved in QuickBooks. Check the spelling of the name, the email address, phone number, and billing address. Small errors can cause invoices to be sent to the wrong person or make follow-up difficult. If the customer has special payment terms, make sure those terms are captured correctly before moving to the invoice details. Check this carefully before saving the invoice. Good invoice details make payment follow-up easier. This small control protects your reports and cash flow. Step 3 is to complete the invoice details. Enter the invoice date, due date, invoice number, and payment terms. If the customer gave you a purchase order number or reference number, include it so their accounts team can process the invoice faster. Use clear dates and avoid backdating unless there is a valid accounting reason. This section is important because it affects when payment is expected and how your receivables report will appear. Check this carefully before saving the invoice. Good invoice details make payment follow-up easier. This small control protects your reports and cash flow. Step 4 is to add the products or services sold. Choose the correct item, enter the quantity, rate, discount if any, and applicable tax. Make sure each item is linked to the correct income category so your profit and loss report remains accurate. Avoid using vague descriptions like services only, especially when the customer needs detail for approval. Clear item descriptions reduce disputes, speed up payment, and make your bookkeeping easier during monthly reviews. Check this carefully before saving the invoice. Good invoice details make payment follow-up easier. Step 5 is to review, send, and track the invoice. Before sending, confirm the subtotal, tax, discount, and final total. Check that payment instructions are included, such as bank details, mobile money details, or any agreed payment method. After sending the invoice, monitor its status in QuickBooks. When the customer pays, record the payment against the invoice instead of creating a separate sale. This keeps the customer balance correct and prevents double counting income. Check this carefully before saving the invoice. Here is the Financial Beacon consulting tip. Do not wait until the end of the month to create invoices. Send invoices immediately after delivering goods or services, because delayed invoicing often leads to delayed payment. Review unpaid invoices regularly, follow up politely, and keep your records updated. Good invoicing protects cash flow, supports tax compliance, and gives the business owner a clear view of money expected. Like, comment, follow, and share Financial Beacon Consulting for more practical accounting, tax, and business finance tips.